Hey everyone, Daniel here and welcome back to another video. I hope all of you are having a great day out there. As always, here today, I want to talk about a brand new stock that I never covered on this channel before, but it's really piqued my interest over the past couple of days here, and I think it's a very attractive opportunity for a lot of long-term investors like myself to potentially be a 4 to 5x opportunity over the next couple of years here as long as the company executes. And in this video, I want to talk about exactly what this company is, my opinions on it, my price targets, and exactly what I'm doing it in regards to my portfolio. So if you end up enjoying this video, finding some value in it, make sure to subscribe and let's get into it. First and foremost, what's the name of this company? GURU. GURU is an energy drink company that is really revolutionizing the game by including only organic ingredients and using low levels of sugar. One thing that I really want to point out here is the current energy drink market being dominated by two main competitors, Monster and Red Bull. These two competitors are essentially making up 70%, over 70% of the total market share when it comes to energy drinks within the United States and North America. And when we talk about what similarities these two, along with a lot of the other competitors have, they're all very high in sugar, they're all loaded with chemicals, and they're all just overall awful for your health. What GURU is doing is going ahead and using organic ingredients, using low levels of sugar, and creating an energy drink that is actually not too bad for your health. And we're going to talk about exactly what my thoughts are on the actual product. But I'm not too big of a energy drink fanatic. I don't drink it that often. I tried the GURU, I've tried Red Bull, I've tried Monster, I've tried a few of the other ones. I'm going to be completely honest with you guys. I think, in my personal opinion, the GURU tastes the best out of all of them. That's my personal opinion, though. Let's keep going. The energy drink market as a whole, to get an idea of exactly what type of market we're looking at when it comes to energy drinks, is growing massively and is already massive in a kind of proportion, expected to grow to almost $20 billion in market size within the United States by the end of 2024, growing 8.1% per year. So that's a big tailwind, so that even if GURU maintains their current market share, they're in a point where they're going to continue growing revenues, not only if they manage to continue grabbing market share from a lot of the major competitors, obviously a very fast growing industry talking about organic energy drinks. Their target kind of consumer is millennials and Gen Zs. These individuals are really focusing in on finding organic products, healthy products like the GURU. And by the way, I'm not sponsored by them whatsoever. I'm just an investor in the stock market, obviously, and I think there's a big potential here with their stocks. I'm not being paid by them whatsoever to plug their stock or anything like that. I just think there's a good opportunity here that a lot of people are overlooking in the stock market. Now, just looking at this, a lot of millennials and a lot of Gen Zs are looking at organic products and favoring them over products like Red Bull or Monster that are, again, loaded with chemicals, high in sugar, and just bad for your health. GURU solves all of those problems and makes a drink that is actually tastes good, if not better, while also having lower levels of sugar and obviously better for your health. Talking about the actual product here, again, using organic materials. They do have a few different kind of product lines. And keep in mind, this is a company at the forefront of innovation when it comes to this space. I mean, just in the past year here, they've launched 3 new products, Energy Water, Yerba Mate Energy, and Matcha Energy. All these have different aspects to them. I actually have the Energy Water here. I've tried a bunch of the different ones. This one's actually very interesting. It's almost like the bubbly of energy drinks where, zero sugar, obviously, zero sweetener whatsoever. Obviously has that bit of a fruity taste in it, but it does have that caffeine, which is an energy drink aspect. I think that could be a big opportunity, especially with the United States and Canada, as they continue to expand their product line and expand throughout the remainder of the world. Talking about the company, they were originally founded back in 1997. The thing is, they didn't really focus on growth up until the last couple of years where the CEO switched, and we've really started to see massive revenue growth and massive expansion when it comes to new products, new packaging, and new market expansion in that situation here. So this is obviously a company with a lot of experience when it comes to the energy drink game, and I think it's really only now where we're really seeing that expansion throughout the rest of Canada, throughout Quebec, and throughout the United States, which will help propel revenue growth going forwards. Now, this may be the single most important or interesting thing out of this entire company. gross margins. How much money are they making, or rather, how much money does it cost them to make their product? Their gross margins are at 65.7%, meaning that for every $100 in gurus that they sell, they profit $65.70. Obviously, then you have advertising expenses and general expenses and whatnot, but it costs them right around 34.3% to make the actual product. That is unheard of in the energy drink game. I mean, even a company like Monster Energy, one of the biggest companies, has gross margins at 60%. Guru is beating them out. A company like Celsius, which again we'll talk about a little bit in a second here, is a company with gross margins at 40%. Guru is beating both of them, and that showcases a big potential comparison to be made with a company like Monster Energy, which has very similar margins, and we'll go through that in a moment here. But overall, talking about growth in the near term, they're currently focused in on kind of Quebec. That has been their main market. That is where their dominant market is at this moment in time. And if you haven't seen Guru, that is most likely why they've been really focused in on Quebec and have 13% market share in Quebec, the third largest energy drink within that province. Absolutely phenomenal. Talking about current expansion moving forwards. We're expecting to double their market share over the next 4 years within the province of Quebec to potentially have 26% market share. Within the rest of Canada, they're aiming for around 10%. And then obviously the United States. I think that is the big opportunity when it comes to a company like Guru, an $11.3 billion market. I mean, picture if they managed to get maybe 0.5% market share or 1% market share. That's revenue of $150 million. We have to talk about the company's actual market cap in a moment, but that is a big number, needless to say. Now, looking at online, I think that's more of a wild card for a company like Guru, but keep in mind, it is a $2.5 billion market opportunity, so focusing in on Amazon or their e-commerce store could present a massive opportunity alongside retail locations, going into gas stations, other retail locations, and other things along those lines. Now, looking at the company's actual ticker symbol, if you're located in the United States and want to buy the stock in US dollars, they're listed on the OTC exchange under ticker symbol GUROF, and if you're Canadian and want to buy the stock in Canadian dollars, they're listed on the Toronto Stock Exchange, I believe, under ticker symbol GURU.TO. Their market cap in Canadian dollars currently $400 million, and market cap in USD is right around $330 million. So obviously, this is a company that has massive potential given the market opportunities that we just looked at. And just a note, all of their numbers are listed in Canadian dollars. So when we look at all of these different percentages and things along those lines, that's all in Canadian dollars. But looking at potential upside with the stock, that's all percentage-wise can be translated to both the company listed on the US exchange and on the Canadian exchange. It translates pretty dang well. Looking at the current valuation, a company like Guru is valued at a price to sales ratio of 17.4. And I'm using the price to sales ratio because Guru isn't really that profitable yet. They're operating at in and around break even at this moment in time. And when we compare to a company like Celsius, they're also not really that profitable yet. And both companies are really going to expand on profitability in the coming years. But they're both obviously expanding very quickly when it comes to revenue growth. And looking at the price to sales metric, a company like Celsius is valued at 26.2. Significantly higher than the 17 to 18 that Guru is valued at. And keep in mind, Guru has 65% gross margins, while Celsius has 40% gross margins. So that means that a company like Guru can take much more of their revenue down to the bottom line than a company like Celsius because they have more gross margins. Now, comparing it on a profitability basis, we know a company like Guru has gross margins at 65%. If we look at Monster Energy, which is one of the biggest competitors in the space, Monster has total revenues of $4.8 billion in the past 12 months. Cost of that revenue, $2 billion, gross profit, $2.8 billion. Their gross profit margins are right around 60%, a little bit less than a company like Guru. Keep in mind, they have that gross margin, and their net income as a percentage of their total revenue, that's right here, is in and around 30%. 30% net income margin when it comes to their net income. And looking at a company like Guru down the road, it wouldn't be surprising to see them potentially have net income margins in the range of 30%. And what's great here is that we can take this 30% net income margin and assume that, hey, Guru, although they're not profitable now because they're focusing in on growth, potentially down the road, they can have this same net income margin given the relatively same profitability and same sector that the two companies play in. Now, looking at Monster's valuation over the years, I think we can all agree that it's almost been rubber banding around the 30 range. So when I look at a company like Guru, I personally believe that a price to earnings ratio fair for that company is potentially around the 30 range. I think that really is almost like the worst case scenario when it comes to a potential valuation at a company such as Guru, because of the fact that they're obviously growing much more significantly than Monster is and Monster has been. So you could say they command an even, or should command an even higher premium. And that's why I like to do a base, a bull, and a bear case when kind of valuing my stocks. So we'll take a look at a price to earnings ratio of 30, 35, and 40, pricing in different scenarios. Now, looking at my actual model here, the company expects to double their market share within Quebec over the next 5 years. Currently, they have 13% market share, so I'm assuming 26% market share. This could be a little bit optimistic, but we have to keep in mind we're not factoring in any growth of the Quebec market when it comes to the energy drink space. So again, $47 million in revenue, I think that's pretty realistic in Quebec. Talking about the opportunity in Canada, I'm assuming $42 million in revenue 5 years down the road based on a 10% market share of a $420 million market. Again, this is in Canadian dollars, and this is what the company expects to achieve over the next 5 years. Talking about the United States, this, in my opinion, is more of a kind of a wild card. It could happen that a company like Guru succeeds, and they succeed in a massive way in taking over the US market and becoming potentially what something like a Celsius is at this moment in time. I personally don't believe that's going to happen in the next 5 years, potentially longer term. But over the next 5 years, I don't think it would be too surprising for GURU to maintain a 0.3% market share within the US. I think that's pretty realistic. And, given that Celsius right now has 0.6% market share, I think over the next 5 years as they scale into the US, I think it's a big opportunity for them to continue expanding and get to $40 million in revenue. Keep in mind, we're expecting around $90 million in revenue coming from Canada alone, and around 40, so right around 40% of all revenue coming from Canada being added on from the United States. That gives us total revenue of around $130 million 5 years down the road. If we assume that net income margin of 30% that a company like Monster has, we get total net income of $38.7 million. Now, looking at the company's current valuation based on $14 per share, shares outstanding, this is fully diluted, of 29.4 million, giving us a market cap of around $410 million. Looking at these numbers, we're currently paying essentially 10 times 2025 earnings for Guru as a company. That is very, very low. Let me make that very clear. And again, looking back to that Monster example, Monster rubber banded around a price to earnings ratio of 30 over the past couple of years and is trading at a 33 right now. So as almost like a bear case, I'm using 30, and that gives us a triple up almost in share price at Guru. If we use a 35, which is a little more realistic as to what Monster is trading at now, we get an upside of around 230%. And if we use a price to earnings ratio of 40, which is, Monster did hit 40. It actually hit 45 to 50 at one point. So as long as they continue to grow and potentially the market realizes the US opportunity, wouldn't surprise me for a company like Guru to be a 4x opportunity over the next few years. Now, the potential for a 5x is definitely there, but we need to have a situation where Wall Street really starts to price in a lot of growth moving forward. Investors in Celsius are willing to pay a big premium because they're willing to look out 3, 5, 7, 10 years down the road for future earnings. If that happens with a company like Guru, it wouldn't surprise me that we see potentially a price to earnings ratio in the range of 45 to 50. And looking at that 30% net income margin, consider it more of like a potential net income margin to where once Guru expands and transitions from a growth company to more of a value company and focuses in on profitability, that could be something they hit. As they grow, they're most likely not going to hit that 30%, but I do believe that investors will be looking at, instead of what is this company doing now, what could this company potentially be doing from a profitability standpoint once they stop spending so much money on marketing and growth. So what am I doing with Guru stock? Am I buying? Am I selling? Am I holding? Currently, I don't own any Guru shares in my portfolio, but I'm actually planning on buying some within the next couple of days. I do believe that Guru's valuation is just too low to look away at a forward PE, looking at 2025 numbers, of potentially right around 10. I do believe that Guru, given their size, does have a little bit of risk baked into it, but we do have to consider that this is a company with 20 plus years of experience in the drink industry and is expecting massive growth over the coming years. So I think that does dampen a bit of that risk when it comes to size. And looking at my portfolio position of what I'm planning on buying into Guru with, around 3 to 5%. And I really do want to emphasize this one last time. Guru has not paid me anything to talk about this company whatsoever. I personally believe that their stock does have opportunity over the next couple of years, especially if management executes, but keep in mind, all stocks do have risk, and this is not financial advice. Anyways, guys, thank you so much for watching this video. I really appreciate you being here. If you found any value in it whatsoever, please consider subscribing, and see you guys next time.